Hi there, welcome to Neppy Invest. Today I'm going to talk about a company called Yoji. This is not really a company I've been following too closely over the last few years, but I decided to do a video on this company today because I have heard a Yoji mentioned in a few financial or investing commentaries during the past few months. And typically the commentators bring up the name Yoji to talk about the wild speculation and the euphoria in the markets right now and how some companies' valuation are really being overextended, particularly when you compare it to their revenue. And so I decided just to have a closer look at Yoji, at the company's financials, some of their ratios, that sort of thing. And then look at their most recent Appendix 4C, which was released on the 19th of April. Now, this company is in sort of a sexy space, or has been a sexy space, over the last, say, 4 or 5 years. So they are a SaaS company, and they deal with a logistics platform for freight movement. So I haven't delved too deeply into exactly what they do, but simply because they are a SaaS company, puts them into the area where companies can be or tend to be overvalued by the market. So let's have a look at a few facts in regards to Yoji. So Yoji's ticker code is YOJ. Now the market cap of 165 million doesn't seem like it's over the top in isolation. So I just see the market cap 165 million. Well, that's okay. But when I look at the revenue for the trailing 12 months, only 760,000, not even $1 million of revenue in 1 year period. So that's an automatic red flag when I see a market cap of 165 million. Now, there are companies out there with significantly higher market cap than this with no revenue. So it's all about the story with a lot of these companies. But when you do start seeing revenue come into the business coffers, you want to see what sort of growth there is in regards to the revenue. And we'll have a look at their cash receipts growth in the next few slides. I think it's 2 slides from here. Now, the other number I like to look at is operational cash flow. So with a revenue of 760,000, more than likely the company will be operational cash flow negative, and Yoji is, and they're negative by 4.1 million. Now, a ratio a lot of investors do use to sort of gauge the valuation of a company like Yoji in this space is look the price to sales. And the numbers I tend to look at here are 10 is when I get interested in a company. That's when I say, oh, that could be good value. And once we get to a price to sales ratio of 20 to 30, I tend to think that company's more than likely going to be overvalued. Now, when you look at price to sales, you also have to look at the growth rate of those sales or revenue, because a company that is not growing their sales should be valued a little bit differently than a company that is significantly growing their revenue. But Yoji's price to sales at this point in time is 217. So that's about 10 times the number I would like to see. But in saying that, the revenue is on a low base, so only 760,000, and it shouldn't be too hard for Yoji to significantly grow their revenues over the next few years if they are a real legitimate business. So if they are a real business, it should not be a shock to see their revenues approaching 2, 3, 4 millions in the next few years, which would mean that price of sales would come down a fair bit if the valuation of the company doesn't change from here, which is an interesting thing. So a company like Yoji, what I typically do is I look at the risk and the rewards of the company. And when the risks of the companies start to really outweigh the rewards, I will not take a position in the company. And Yoji is heading towards that direction. There's a lot of risks in this company because you have to assume if you take a position in Yoji, they are going to significantly grow their revenue over the next few years to catch up to the market cap of the company. And in my opinion, those risks right now significantly outweigh the rewards. And the rewards are they will actually even grow their revenues at an even greater rate than the market's anticipating, which would suggest the market cap is lower than it should be. So at this point in time, I'm not that attracted to these sort of companies where there's a lot of risk and not much reward. Onto the Appendix 4C for Yoji, a few red flags here and one non-red flag, I suppose. The major red flags here is receipts from customers is still fairly low, 332,000. But what I want to see is a growth rate or a trend in receipts. And we'll have a look at that in the next slide. The other red flag is they are operational cash flow negative, and you would expect that with low receipts. So operational cash flow negative by 832,000. Another red flag for me is their receipts from customers can't even match their administration costs. So administration costs for the quarter was 576,000. So they still have a lot of costs they have to cover, and we need to see significant growth in their receipts. And at the same time, we can't see their costs growing at a greater rate than the growth in receipts. Now, one thing about this company, I suppose, is okay, and I do like, is a cash on hand. So they do have $20 million of cash at the end of the quarter. But because they are remaining operational cash flow negative, we should see that cash come down every single quarter. But the good thing is, more than likely, they won't have to do capital raising for at least a year, or maybe even 2 years, depending on their cash burn rates, unless they do a major acquisition. And what I like to see is companies who are growing their receipts organically over growing their receipts by acquiring. Now, that's not saying acquisitions can be bad, but I just like to see a company grow organically over growing by acquiring. The next thing I like to do when I see an Appendix 4C is take the receipts out for the quarter and then compare it to previous receipts from past quarters. And I just like to see what sort of trend we have over time. And the main thing I'm looking for here is an upward trend. And we definitely have that with Yoji through time. If you take away those little dips through time, we do have an upwards trend and we do have a growth rate. And that growth rate is at this point in time 14% per quarter, which is okay. I wouldn't complain about that. And the growth rate has accelerated in the past year. So if you go back to April 2020, we had $121,000 in receipts, and now it's 332. So it's been growing at 29% per quarter. Now, for the valuation of this company, those probably growth rates aren't quite enough to get me excited, but we have seen the acceleration in those receipts over that year. And if that growth rate or that acceleration in receipts can continue for the next few quarters, that's when I might become excited in this company. So at this point in time, I'm just staying away, being a little bit patient, just seeing if this company can fulfill their potential when it comes to their receipts. Because at this point in time, and it's only at this point in time, the risk rewards for Yoji is more swayed towards the risk than the rewards. Now on to looking at some charts for Yoji. And the first chart is the 3-year weekly chart. I like to look at weekly charts, particularly over longer time periods, because you can see where sentiment shifts. And when you see sentiment shifts, is a good time to buy or sell, depending where that shifts happen. So Yoji has gone through 3 phases of sentiment. So the first phase in sentiment was between April 2018 and April 2020. It was a negative phase in the sentiment. Share price was drifting lower on low volume. In fact, the share price went from a high of 16 cents in April 2018 to a low of 2 cents at the depths of the COVID-19 financial panic. And then in May of 2020, the company released an announcement to the market, and that announcement really excited the market, and that was a catalyst behind the re-rating of Yoji's share price and the shift in sentiment around the company. And then we saw a positive phase when it comes to the sentiment in Yoji. In fact, the share price rose from a low of 2 cents to a high of 28 cents. That was a 14 bagger. So if you held through that period and then sold at the high, you would have made 14 times your money. But then we saw a shift in the sentiment around that high of 28 cents. And during that positive phase, we also can see a massive increase, well, maybe not a massive, but definitely an increase in volume during that period. And then when the sentiment shifted again at that high of 28 cents, we started to see the volume come down. So right now we're in a negative phase when it comes to the sentiment around Yoji. Share price is drifting lower on lower volume. So what we're waiting for now is another shift in sentiment to send the share price higher. When that shift in sentiment comes, we don't know. It might be in regards to a positive announcement, might be in regards to increasing financials. We'll just have to wait and see. Now onto the 1 year daily chart, and I like to look at this chart because you can see where the sentiment shifted from negative to positive in May of last year. And it was all regards to an announcement that a company released to the market, and they signed a service agreement for 2 companies in the Philippines. The market loved this announcement. Share price rose 84% in 1 day on massive volume, and then the share price just went sideways for about a month. A perfect time to buy into a company at that point in time, because you didn't see the share price decrease after this announcement and the share price action. Share price went sideways. It was consolidating. So that was the beginning of a positive fade or an uptrend in the share price for Yoji. And it continued for about 3 or 4 months, got to a high of 28 cents. And then we saw a downtrend develop. And that downtrend has continued. But over the past few days, there is potential that downtrend may have been broken because the share price pulled through the downtrend on higher volume. So right now, paying closer attention to Yoji's share price because it may have just come out of a downtrend. That's all I've got for this video on Yojee. If you are a shareholder of this company, can you please leave a comment and talk about why you bought into the company? I'd love to hear differing opinions on why people have bought into companies. Maybe I'm completely missing something when it comes to this company. At this point in time, this company is on my radar. I am going to be paying a bit closer attention because of 2 things: an acceleration in the cash receipts and the possibility that the company has gone through that downtrend in their share price. Now, I'm not a financial advisor, so if you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's all for this video. Have a good day. Bye.